Joining me now, John Carney, Breitbart economic and finance editor, co-author of the Breitbart Business Digest, Scott Bessent, founder of Key Square Group. Gentlemen, welcome on set on a very interesting day. Scott Bessent, I begin with you. Just what do you make of it? Can you tell me?
Well, Larry, it's a sharply divided Fed. We had first dissent by a governor since 2005, and it looks to me like Jay Powell pushed this through pretty hard. He managed the market pricing so that he could walk into the meeting, tell the other governors, well, this is what the market's expecting. We shouldn't disappoint the market. And I agree with you. I think they should have started with a 25 and gone from there. And unless Jay Powell has a view on the economy that's not evident in the current data, this was too large. This is the first rate cut this close to an election in 75 years. If you're trying to give the appearance of not being political, this was just the wrong thing to do.
You know, it makes me think, John Carney, I'm going to put this in the RIF when we publish the thing. But the fact is, why couldn't they have waited until the day after the election in November? Why do they have to do 48 days before the election? It's not going to matter. It's not going to impact the economy in the next month. They could have waited and therefore been totally non-political. Now I think they're going to be subject to some, fair amount of criticism. I don't know what Mr. Trump's going to say. I have a feeling he's not going to be happy with this.
Larry, they absolutely should have waited till November. There's no economic theory that tells you cutting in September will change the economic path of the country rather than waiting till the day after the election in November when they have their next meeting. The other danger of this 50 basis point cut is what happens if Donald Trump is elected and they decide they want to do 25 in November. Guess what? It'll look like they pumped the economy for Kamala and then decided to stop being as unrestrictive when Donald Trump got elected. So they are actually locking themselves into a series of 50 basis points cuts, and they don't even realize it. Powell said, this is no set path. Don't think that this is the new way forward. It is the new way forward, especially if Donald Trump wins in November, because they will not be able to say, oh, we thought big cuts were good under Kamala, but now we got to dial that back under Trump. That'll be politically explosive.
I mean, I was reading Committee on Unleashed Prosperity Hotline, and they highlighted commodity index prices have come down about 15%. Long-term interest rates in the Treasury market have come down, although I think they went up slightly. By the way, the stock market, I don't know, last time it didn't do that much. It was up slightly, not huge today. But I understand that. I understand the unemployment rate has been creeping higher, so we'd all keep an eye on that. Again, that sounds like 25 basis points to me. On the other hand, the Atlanta Fed's GDP now is, I think, 3% for the third quarter. The Fed's own target is 2% for growth. So, no, it's just there's just something about this that doesn't tie together. Maybe that's being reflected. You said there's disagreements among the FOMC members, and maybe because it doesn't tie together, and because Jay Powell may have jammed it through.
Well, I think he did jam it through. I mean, if you look at the dot plot, it's pretty clear for the rest of the year. Two of the members do not want any other cuts. 7 want one more cut, so they would have obviously preferred 25 and 25 and moved at a measured pace. And look, Larry, I've studied a lot of financial history, and this is how we got the recursive inflation in the 60s and 70s. It was a false dawn. Spending kept going, which we likely see under Harris, as you just mentioned, and these regulations that they keep putting on top. When big government demand shock meets big regulation, you get big inflation. So, I don't think the Fed should be declaring victory here.
So much of the GDP is government related. Now, government per se is a fair piece, but a lot of the consumer spending is government benefits flowing through to the economy, a lot of it going right into checking accounts. Now, again, the mistake the Fed made 3.5 years ago, basically, and made it for 2 solid years until they wised up, is that they're monetizing all the federal spending and the federal borrowing. They're monetizing it, okay? Now, I'm not saying they're doing that again altogether. It has the same feel, though. You have to worry about the late 60s and the 70s, as Scott Bessent just said. It just, I don't know, John. It doesn't hang together in my mind. I don't want to criticize the Fed just for the sake of criticizing it, but they could have gotten the same outcome with 25 basis points, and people would not have accused them. This will politicize the Fed. I guarantee you this. I mean, I'm going to ask. We have a couple senators coming up on the show. Newt Gingrich. I want to find out what they all think about this.
There was also a warning that nobody has looked at yet in those Fed projections. They've been raising the long-term Fed funds rate every other meeting all year round. It was 2.5% for 4 years, from 2019 through 2023. It just went up to 2.9%. It was up at 2.8% back in March. They keep raising it up. It's going up. What does that tell you? That's telling you we have a bigger underlying inflation problem. That comes from the government overspending. So they are looking at this and they are saying we do have a spending problem. I think they think Kamala is going to win is part of the issue here. And they think that, therefore, the long-term rate to get inflation down to 2% has to be higher than they've ever thought for the last 4 years.
Scott Bessent, do you think the typical family, middle-class family, maybe a lower-income family, but working folks, do you think they would agree with the Fed that the Fed has conquered inflation?
Well, Larry, if you look at the numbers, the University of Michigan consumer spending, the expectation for the lowest quartile, inflation expectations are twice as high as for the median. So the median inflation expectation is around 3.5. Because the lowest quartile, as you mentioned earlier, food, groceries, mortgage, insurance, their inflation experience has been very different. So they're anticipating 6 or 7% inflation because they have necessities. The other thing I would say, I think this cut, I've been saying for a while that I think we are in the U.S. in an emerging market style equilibrium. It's a bifurcated economy, and the Fed has goosed asset prices in the stock market, in housing. The top 10 or 20% are spending from the wealth effect. The bottom 50% for the past 2 years is getting crushed through inflation, through high interest rates, and through mass immigration.
Well, that raises another point, John Carney, and that the lower ends doesn't see any real inflation or price relief. The lower end, I think the lower end basically is very pessimistic. And I don't think that markets, as Scott said, look, 130 million people are in the market one way or another. The middle class is in the market, but in much smaller amounts. The lower income people, not in the market very much, if at all. Now, if conditions were so tight, financial conditions were so tight, why are these, Dow Jones rising, S&P rising, the Magnificent Seven rising? I mean, as I learned it, I've been in and out of this for a long time. Tight money is antithetical to the stock market or even to the bond market.
I don't see any evidence that monetary policy is overly restrictive. We got the industrial production numbers, the retail sales numbers. None of them showed restrictive at all. The one thing I will say that does seem restrictive is, and this goes to what you guys are talking about here, people are very depressed about their economic prospects. And so when today a YouGov economist poll came out, among Democrats, when asked, will you be better off a year from now? 20% of Democrats say they're better off, just 20%. Among independents and Republicans, it's much lower than that. So one of the things that has happened, and I think that is somewhat restrictive economically, is that Biden and Harris have crushed the economic hopes of Americans. And when asked, will you be better off, even her own supporters say, no, not really. We're not going to be better off.
Well, she can't answer it going backwards. They can't answer it going forwards. I think you got a political problem there. Scott Bessent, what happens if Kamala wins, which she could? She could win, okay. She has a plan to raise taxes by about $5 trillion. And meanwhile, the Fed's in a super cycle, perhaps, to ease money. What happens? Well, high taxes and loose money. What does that mean? Going out, got to get out.
My biggest position is gold. Gold's been going up since Kamala Harris. They replaced Joe Biden. I think we'll keep its dollar devaluation with gold. John Paulson said this morning in an interview that he would go to cash, but I think you got to think, like, what cash do you want? Do you want gold? Do you want other currencies? Because the U.S. dollar hasn't liked this Harris candidacy.
All right, we'll have to leave it there. John Carney and Scott Bessent, thank you, gentlemen. Appreciate it.